So what do you do with the dollar? Everybody thinks you sell the dollar right now. Do you just keep selling the dollar? If there are bounces in the dollar, do you sell those bounces?
Yeah. I mean, we're still sellers. Look, a lot of people have been selling dollars. Let's be clear on this, that since about the last week in October, dollar selling has been the trade, and it's been relentless. But that said, I think the Fed wants to stay behind the curve. I think if you look at the U.S. policy settings, everybody's begging the Congress to do fiscal policy, but the fiscal policy is income maintenance and demand maintenance. It's not really supply side. So I think that we're going to end up with a much wider external imbalance and low interest rates, and that's the formula for a weaker currency.
Well, on the flip side, everyone's going to do that. I mean, everyone's going to be issuing, everyone's going to be dealing with a high debt load. The other conversation is that the U.S. is going to grow faster out of this than, say, Europe. Therefore, that's more bullish dollar, particularly as our lockdowns on the whole have been less strict than Europe. What's your counter to that?
Well, let me come to Europe in a second, but yields in emerging markets are not that low. They're not that low in China. Real yields are way above where they are in the U.S. We have other emerging economies where yield differentials are not where they were 5 years ago, but they're pretty significant by current standards. Europe itself, look, I kind of share the kind of concern that any kind of European recovery is going to be lagging. I think we're seeing a lot of emerging market reserve managers buying euros because they just don't want to hang on to dollars. But I don't think Europe will be the driver of dollar weakness. I think it's going to be emerging markets.